The news will do more to terrify than to clarify. What does that mean to you in this market today? So let's unpack that. Hey everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38, and today's topic is the economic growth that we're seeing, the drivers into real estate, and why we're seeing multiple offers and prices are actually selling above asking. So let's go ahead and unpack that. Now, in the news, whenever there's volatility, you are going to find more articles saying we are going down in price. Now, of course, you'll read that. There was an article in Zillow that they just came out and they said San Jose is going to go down by 20%. Well, Zillow, you're late by about 9 months. We've seen this prices come down from March of 2022, and we saw that in August. That was pretty much flat for the year, and we have seen an additional 4 to 5% drop. Then we are seeing a bit of recovery. So price per square foot, January, February, selling slightly above than December and November. So let's actually talk about the 7 points as to why we're seeing this drive into the real estate market with multiple offers and things selling very quickly. Job security. I know it's contrary to what you're hearing out there. You're hearing layoffs. You're hearing this instability, and it seems like you may know somebody that's worried about layoffs, but yet they still have their job. Well, let's pick at Meta. And by the way, my heart goes to the folks that did get laid off, and it's really hard to the folks that did. And unfortunately, it's part of the environment that we're in right now. However, what Meta doesn't tell you, they hired almost 30,000 people at the turn of COVID to satisfy the demand that it exists. Now, unfortunately, they laid off about 11,000 of those folks, right? So we're still higher than pre-COVID employment numbers. Look at the biggest employer here in the Bay Area or South County, Apple. Have you heard of any layoffs? So anyways, there's job security into the market. So that is the number one driver as to why we're seeing where buyers are moving. Second point is the stock market is coming up. It's recovering. So people's down payment is actually increasing. So if the stock portfolio has gone down 20, 30, 40, 50%, right now we're seeing that recovery. So people are pulling that money out to use it as a down payment. Rates are going down. 6% down to 5%. I can get you 4.5% with the bank that we're working with. Unbelievable. This is like 2018 and 17 rates, 4.5% on an ARM product. So the rates are down. So therefore, the monthly payment is cheaper. So people are getting into the market because of that. Buyers are not going outwards, meaning I am working at Google or Apple, but because of this work from home indefinitely, I'm buying a home in Lake Tahoe. That's gone, right? So people are staying locally in the Bay Area to buy a home. So actually, in fact, I can get you data to show you that the closer you are to work, so that's a working city versus a commuting city, say like Fremont or Morgan Hill, that has seen a lower drop in prices in comparison to Sunnyvale, Santa Clara, or Cupertino, where the job locally exists. So people are not going outwards. Also, builders. So 2005, 6, and 7 created this housing boom. 2008 was the bust. Well, builders continued to build through the bust, and they ended up with all this inventory that they had to sell it at a discount. Well, builders, what they did this time around, as soon as they saw a slowdown, they stopped building. They stopped pulling permits. So they're sitting on the sideline saying, do we build? So of course, between supply chain issues, the cost of material, and also labor shortage, forced them to build less anyway, and now they're even building less than that. So pretty much construction is non-existent. New construction is non-existent here in the Bay Area. Number 6, we talked about the point. If you are a move-up seller or a buyer and you want to sell your home and you want to move to a bigger home or a smaller home, your interest rate right now is 3%. And if you want to buy a new property, you're going to have to obtain 5% or 4.5%, the best rate possible. So you're not moving up. You want to stay put to see where this market is going to go with the rates before you make that move up purchase, meaning sell your home and then possibly buy another one, whether it's larger or smaller. And then, of course, the pent-up demand for the past 12 months. Look, whenever there's volatility, a lot of buyers are going to sit on the sideline. I want to watch. I want to make sure, rightfully so, before I dip my feet into that water, because I don't know what kind of water. It's kind of murky right now. It's clearing up, and a lot of that buyer demand that's been on the sideline is entering the market because there's more stability. So those are the 7 drivers that we're seeing today, real time. Of course, we'll continue to record these kind of videos to put you in the know of what's happening real time. So if you're thinking about entering the market, Mr. and Mrs. Buyer, please give us a call so you're informed. 408-515-1613. Bye-bye for now.